Futures are up, even though the Nikkei has fallen another 5%. U.S. data appearing today includes weekly jobless claims and GDP estimates. Which way will this current market range resolve? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So after markets were down yesterday and we saw Japan down overnight, our futures seem to be shaking things off a little bit this morning. They're pointing towards a higher open, perhaps giving us a signal that maybe this isn't such a scary pullback after all.
Well, this morning on the Twitter feed, everyone was saying Japan's down 5%. Oh my goodness, our futures are down 3-4 handles. But an interesting dynamic happened, I think, within the last hour, where Japan said that their pension funds can be now allocated to their markets, or the markets a little more freely. So I think their futures wound up bouncing as the market was closed, and that helped our futures. And even though we've been kind of tracking them all year long, it hasn't been so what they do, we do, vice versa. And considering they had a 50% move and now a 14% move off the highs, they're still up 36% year to date. Our markets may be dislocating from them a bit. But overall, this range still stays intact.
So why don't you show us a visual then of the range that we're looking at right now?
So we've spoken about the S&P pivot wedge that's been being developed over the course of the past few sessions. All right, we've seen this a few times this year. This was the start of the year. This is when we broke this descending trend line. This is when we broke above 1474, and from there we had a nice move up to about 1530 before correcting about 3.5%. From there we bounced, held higher, continued. Then, if you remember, we had that breakout failure right around here at 1576. Came in pretty harsh, but what do? We held the 50-day. So if you took some risk off here, and you saw this bounce, some people put it back on there as we held higher. And then we went above 1597 to go on another run. So here we are. Remember last Wednesday, that outside day when we hit as high as 1687? That was a spot that finally gave you some clues to take some risk off, maybe get net short, and then on this day was the day that Japan was down 7% and our futures were down pretty big, giving us follow through to the downside. So if you want to take a closer look right now at this wedge, so we could really have you write down some levels here, this is now key support. Okay, yesterday we hit a low of 1640, in here last week 1635-ish. Here is that high from Wednesday. Here's your lower high of 1674. Question is, do we put in another lower high right around here and then let this range tighten up, and then at some point, perhaps next week, when we get new flows, or once the maybe window dressing could be over, because that's what we could be seeing the next 2 days, then either we'll get resolution to the upside or to the downside. But right now, I would say on an intermediate basis, I would continue to tactically trade and not have that much risk on, especially if you had a nice move and you booked some gains along the way, which has been about 16+% in the S&P, let alone individual stocks.
Well, we're going to turn the spotlight on the ags this morning, which has not been one of our leading groups, but we are starting to see some names perk up a bit. And as we get into the summer season, perhaps this could be a seasonality play. Yes,
we've been just trying to look for where the action is, and when you have some risk off and you're looking for tactical plays, that's what you do. And a lot of people talk about in the second and third quarter how the ags actually become that seasonal play where money could rotate to. So if you look here at the the MU, okay, which is an ETF for the ags, you'll see that it's been in this really tight symmetrical triangle for a while now, okay, and it hasn't really shown you much follow through in either direction. You go to the daily chart here and you will see it really has to get above this area to start looking much better. So that is 55.19. So if you want to be in like a tier 1 in this ETF, I would be in it versus this area versus the 200-day, and then if it finally gets above and makes another breaks this little I would say range of high, lower high, or this series of lower highs, then perhaps it gets some movement over the summer.
And if we look over at Agrium, looks like the stock's holding the double bottom level of 88. It did close up 1 and about 1/4% yesterday. Do you think we could get an oversold bounce here?
It's trying. We like as traders tight patterns, and sometimes as investors you like upper tight patterns that have given you no pain. This has not been one of them. As an investor, it's come down a lot, it's been bruised, the trend has been to the downside. But for a trade, some guys were looking at it yesterday. If you look at the chart here, you will see, this small, tight little area, and I hate talking about laggards, because look how far this has come down. But sometimes some people think they're cheap when they're down here, and they'd rather, instead of looking for momentum like happened here, they want to buy in the whole versus support. So if that's you, take a look here. It did have a 1 day, or a day one, so to speak, here. And then perhaps it gets to this moving average, and then maybe back to the 200 day. So for a trade, if they do get some flows, I would maybe buy it versus 90.50. But again, this is a laggard trade that needs time to work out.
Well, CF Industries broke out of its descending channel yesterday with decent gains of about 2.7%. The stock did close on highs, so perhaps we should look at this today for continuation upside.
Yesterday, while the market was red, the ags went green, which is the reason why we're putting it in today's morning call, because otherwise it wouldn't be such a focus considering where these are within their charts. But if you look yesterday, it didn't matter for those that bought it when it cleared this descending channel above 190, and closed pretty well. So now the next question is, can it reclaim the 200 day? If it reclaims the 200 day, perhaps it could start acting better, and maybe it is this season. But yesterday, it was a good trade. If you took it home long, congratulations. Futures are up a little bit. Maybe it's up with it, but I would say it has to hold at least half of this wide range bar for continuation, and this would be your next level if it could close above the 200 day.
And Mosaic registered almost 2% of gains after reclaiming all key moving averages. So where would next resistance be here?
Believe it or not, this has become a better acting ag, and it's holding higher. So if you look here for Mosaic, you will see that it did clear and recaptured all the moving averages, which is something that I like. The breakout failure that happened here led to some of a corrective phase, but what did it do? It held the 200 day again. So it's all about time frame. If you go to your weekly chart of Mosaic, you will see that it is trying to act better here. Okay, if it were to get above and close above 65, then you'll have you move later, whether it's this quarter or the next quarter, into the 70s. But so far, so good. It's not a barn burner, but I do think this is acting well. And if you like the ags and want some ag exposure, this could be at least a tier 1, and then maybe over 65 a tier 2.
And Monsanto found good support along its 100 day over the last few sessions. Are the 8 and 21 day next? Does it look like it could break through there?
Well, it's trying to hold the 21. So this has been a leader in a group that hasn't had much leadership. And we were trying to talk about whether it could break out here, and it was such a lethargic move that finally, broke down. So, it's interesting here. I guess you could try and be long, but if the ags roll over and the market rolls over, some might actually be looking to short this thing, and the short would be below, 103, and then perhaps a move to, the 50 day, which I think would be a better macro buy here, because this is one of those ascending channels that if it does break here, you could see more downside. And again, this group is a laggard group.
All right, coming up, we're going to go in the trenches with the banks, which have been a particularly strong group during the pullback. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
As we look for clues about which way we'll resolve, perhaps we should look no further than the banks, which acted best during the pullback. And now, at this point, it'll be interesting to see if they can make higher highs.
Yes, there's a lot of talk that when you have some rising rates, there's more business for the banks to do, and they've been strong, so sometimes strong sectors get stronger. So it will be interesting to see if the relative strength continues and if this can make higher highs. You look here at the XLF, this had an outside day just like everything else, and I think it was the last one to give on that Wednesday. Came in, didn't even get to the 21 day. Okay, most sectors went all the way down to the 21 day, this didn't, so that showed you the buyer stepped in beforehand. Then a little bit of a higher low, it gapped up 2 days back and put a lower high in, and then yesterday held the middle end of this, where a lot of the other groups went back to the lower end. So this is showing relative strength. If this were to start getting above 2011, perhaps this group can make a higher high, and then stocks within this group could get some momentum, especially if you stayed with it. Maybe there's some trades besides just holding some on the intermediate level.
Perhaps stocks like Goldman Sachs, best in breed in the group that got a nice push yesterday, is already traded back to highs. Perhaps Goldman would be one of the first to make higher highs.
Yes, every day that we've started down, or I think most of them, this was the first one to go green. So as a trader, you always want to go to where the relative strength is, and then it's pushed. So if you look here at Goldman, you'll see that a few weeks back we talked about this descending channel, and off the charts right here was a level. Then when it cleared this 151 from there, it also had an outside day, but it's regrouped really quick. Look at this outside day, came into the 8-day, held it, went higher, and now this is that that resistance area. So if Goldman were to get above 165, anyone who shorted here and didn't cover, or people who got out of their stock, will probably be chasing. People who are just looking for a tight pattern to potentially make some cash flow with could see a nice move. But the question is, when you get over a momentum level, you want to make sure you stay over it. So if you're playing for a move above this, what is this, 164.13 or 164.50, make sure it holds it in order to continue to stay with it.
And JP Morgan, not too far behind, has been climbing above its 8-day for the past 3 weeks or so. Would you say it might be getting a little extended at this point?
Not really. It's just showing actually extra relative strength. It was extended and then pulled back, went sideways. So this is what you want to see in a strong group and a strong sector. If you look here at JP Morgan, I think we also had this in off the charts right around here, right around this 50. This is when I think, they had the vote about whether or not they were going to, take away both roles for Jamie Dimon, and he said he wants them both, and he stayed. Meanwhile, let the 8-day catch up right there, didn't get to the 21-day. So now if this were to get above, what was this, 54.96 or 55, you could see another extension. You always want to be a little careful, when you get these add-on type buys, but you also don't want to fight them. And this one has been acting very strong recently.
And Bank of America also looking good. It's been holding higher levels of support. All key moving averages curling up. Another solid one.
Yep, and this one I think just needs to get above 13.55, and then that can continue. Everyone knows my thoughts for the year is, $15, $16 for this. This was your last breakout that wound up holding. This one went all the way down to the 21-day, but held in very well. Last time we talked about adding to it was right around this 12.41. This is looking good. I'm actually long this, and I've been trading around it. This is one of the core banks that I've been decided to try and stay with all year long until it reaches my weekly projection. And my weekly projection on this is, if you look at the chart here, you'll see, this is the 200-day at 14.41. I still think it can go a little bit higher or north towards 16 for the year.
And Morgan Stanley was able to reclaim the 8-day yesterday. What are levels to watch here?
This one, started to act much better, after earnings. And if you look here, you'll see that it also is it's in the game. All these banks are starting to act better. This is when this cleared this descending channel right there with a nice gap up. You had a nice move. Here was your outside day, which led to a move back to what? Almost a 21-day moving average. And now it's holding above the 8. With some time, this can go. This isn't my favorite vehicle to use, but it does move from time to time, and it's in there. I would say out of this whole group, if you want bank exposure, pick one that you want to hold and trade around, and then one for cash flow. And I typically use Bank of America to try and hold, and then I trade Goldman, and then every now and then I'll dabble with JP.
Well, you didn't mention Citigroup in there. Let's just get in
yes,
Citigroup really
Citigroup
quickly.
Also. Who am I kidding?
It just was able to run into short-term resistance of about 52.90s, back above all key moving averages. So I think it'll be able to break through that level.
Yeah, this one actually, I'm sorry. This one looks really good too. It's right near the highs. If this were to get above, 52.89, this can continue. Pulled back to the 21-day, bounced off it real quick. Now it's holding the 8-day. It still looks very strong. These banks they still look very strong. So not a group to fight, a group to try and embrace and stay with.
All right, put your quick hit hat on, Red Dog. Let's talk Tesla, which is still providing some solid two-way trades.
Yes, and yesterday it happened to be a better one to the short side. After a 3-day up move from the relative strength of last week, we talked about buying it perhaps around 85 and then 95. Yesterday it opened up at 114, so we put on our short hats. A lot of guys went out looking for borrows and gapped up, traded below 110.75. That became your Red Dog reversal. You could have shorted here with a $4 stop, went as low as 99. And now I think it's going to need some time. So last time we did this type of setup here, came in, actually traded below that day's low briefly, and then bounced, and then consolidated, and look at that. So right now the question is, does it do an inside day and not have much action, or does it try and trade below the prior day's low of 99 to give you, perhaps a buyable level right around here? I'd love to be a buyer of Tesla somewhere around 95 if it shows its face, but we shall see. So if you're looking to short some strength here because of this bar, just be careful, because Elon will be speaking today at various times, and when he speaks, the market definitely listens, and so do those shorts.
This is true. Let's talk Apple, which is still fighting to gain momentum. What are the levels you're watching here?
Unfortunately, Apple and momentum are hard to have in the same sentence, because that's one thing and one reason why traders are frustrated. Yes, it's acting better. Yes, this inverted head and shoulders pattern is building, but it's been so hard to buy high and sell it higher. But can that change? Okay, if you look here, huge trend from 700 all the way to the lows. If you remember, we had a nice trade after earnings when it traded through this 420 and then held it, and now you do have this left shoulder, the head, the right shoulder. You have this descending little trend line right here. So if this were to finally get above 451 and close above it, perhaps you see a quick move towards 465, and then we're on that road to the 200-day, which is around 500. So at this point, it's very tight. There is some money to be made there. At some point, we need some heavy volume. Perhaps we need to really see an invitation for that wearable device so we could all turn into Tony Stark.
Yeah, those wearable computers, that concrete thing that we've been asking for. Well, how about Hewlett-Packard? Closed on highs yesterday. Perhaps some continuation today?
Yeah, this one, after earnings, big wide range bar, nice flag. Got to hand it to Chart Girl. She was all over this yesterday. Did trade above this little flag and looks good, closed strong. I'm sure it's up a little bit. Unbelievable move for Hewlett-Packard. If you're a Hewlett-Packard fan, congratulations for its renaissance, and technically it continues to impress.
And let's talk the metals. Gold has been acting better, creating higher lows. Where's next resistance?
Well, this is interesting because we talked about the double bottom that happened at 130.50 and whether or not it could hold, whether or not it could build. And here is that double bottom right there, 130.50. You now have a lower wedge within a double bottom. It's tried a few times, hasn't been able to hold above it. Today it's opening up a little bit. If it could finally stay above 135.50 and have a gap and go, maybe it tries to get up and hit this 140 to 142 again and maybe fill this gap. But still has a lot to prove. It's still very random, but overall this could be a move, but it's got to hold the gap first and not just gap up and fail like it typically does.
Well, we do have some economic data coming out this morning. What we'll be focusing on as we head into the trading session?
Just this range. I feel like the futures are up 5 or 6 handles, so maybe they push and try and probe that upper end of that wedge. If we open up today and not hold and fail, then we'll start looking at that 1635. And I think there's a lot of two-way action going on here. A lot of people are being able to trade lately, and that's been welcome. Last week you could have bought it down open twice and made some money, and then earlier this week you could have shorted that up open with a little bit tricky, and then yesterday was a little bit middle ground where it wasn't so powerful off the low. So I would say at this point, do a little less, take the A setups, which have been hard to find. If you're an intermediate trend trader, risk off a little bit here because we're not sure if 3.5% or so is enough as we move into the summer months. But you don't have to know if you've taken risk off, you've booked some trades, and you're looking to be flexible because there has been movement in both directions, so just keep looking for it.
And happy trading, everyone. Have a great Thursday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.